Hail there, families. Welcome back to Business Boots. Are you tired of living paycheck to paycheck? Want to take control of your financials? Today we are sharing 10 family monthly budget planning tips to help you manage your money and achieve financial stability. 1. Track your expenses. Track your expenses to understand where your money is going. For example, use a budgeting app like Personal Capital to track your expenses. 2. Set financial goal. Set a financial goal such as saving for emergency fund or paying off debt. For example, aim to save 3 to 6 months worth of expenses. 3. Create a budget plan. Create a budget plan that accounts for all incomes and expenses. For example, allocate 50% of your income toward necessity like rent and utilities. 4. Patronize need over want. Patronize need over want such as paying rent, mortgage over dining out. For example, cut back unnecessary spendings. 5. Use 50-30-20 rules. Use 50-30-20 rules. 50% for necessity, 30% for spendings out, and 20% for savings and debt repayment. 6. Automate savings. Automate savings by setting up automatic transfer. For example, transfer $5 to savings account each month. 7. Review and adjust. Regularly review and adjust your budget to ensure you are on track. For example, review budgets every 3 months. 9. Avoid impulse purchases. Avoid impulse purchases by creating 30 days waiting period. For example, wait 30 days before buying non-essential items. 9. Consider used or second-hand items. Consider used or second-hand items instead of buying new. For example, buy a used or second-hand electronics. 10. Communicate with your partners. Communicate with your partner about financial goals and budget. For example, schedule regular budgeting meeting. Host, you have make it families 10 monthly budget planning tips to help you manage your finances and achieve financial stability. Remember, budgeting is all about making conscious financial decisions.